Once this video is over, you have a clear picture of why I believe there is strong potential for weakness in the price of metals, which conditions we need to monitor, as well as the importance of having a plan. As investors, we're taught to buy the dip, and that's very solid advice in general. But sometimes what starts as a pothole can quickly become a sinkhole. While this is a far more likely case in terms of equities right now, that doesn't mean we are immune as investors in precious metals. Now, I can hear some of you already saying, well, we don't try to time the market, or that dollar cost averaging is the best approach to investing. And while I fundamentally agree with those notions, that's also kind of watered down milquetoast advice that is given to Joe Public or the average investor because it's safe and secure. General advice like that is good because it protects the general public from themselves and from making poor decisions. But I've already told you, by virtue of watching videos on YouTube and being a subscriber of Stackers University, if you haven't subscribed, go ahead and do that now. You're no longer the average investor, and therefore you can handle more sophisticated information, concepts, and strategies. Let's take a quick trip down memory lane. In my Cash is King video, when gold was at 1883, I said something to the effect of, I'm going to suggest that we all pause for a moment and think about our current financial position. While we all want to hold as much gold and silver as possible, we should really think and ask ourselves, do we really have enough liquidity, particularly in the form of cash? And then I continued on that I thought there was going to be a sharp pullback. Then on May 13, in my Are You Still Fine video, I loosely said, hey, when I think back over the last 2 to 3 weeks, which was in late April, I've said several times in my videos and comments that I fully expect price to retreat from the 1880 range and likely all the way down to 1820 and hopefully no lower than 1780-ish. I also continued by sharing that I had last bought at 1900 because it was a dip and it looked like the decline was decelerating, so I bought a little, and then the price continued to decline. And I said, oops, I was wrong. Gold couldn't hold the 1900 psychological barrier or the 1880 technical. And then I shared that I've been sitting on the sidelines and that I wanted to buy at 1850, and then I also wanted to buy at 1830, and I've been staying on the sidelines. At the time, gold was at 1808, somewhere around there. I also shared that I'm a big believer in buying the dip, but not all dips are created equal. As I shared in my last video, when a knife falls in the kitchen, you don't try to catch it. You let it fall, bounce around on the floor, and then you pick it up. I then continued and quote, to me, that seems like sub 1750 all the way down to the high 1600s. Hopefully I'm wrong, but as I've tried to share it in my videos, I try to present you with the facts, data, and psychology of markets in hopes of helping you become better investors and smarter investors. Since then, I've done a couple of videos covering the fundamentals of the market, the indicators I was looking for, and explained why I was sitting on the sidelines and not buying. As a result, my last gold purchase was April 28th, and my last silver purchase was May 7th. And I've shared in multiple videos since then that I was sitting on the sidelines. So why did I go through all of that, telling you everything that I've said in the past? One, I want to confirm for you that I practice what I preach. And two, I want to remind you that you've been provided with a variety of videos specifically designed to help you be the best investor you can. That you have the resources you need to support you and help you understand what's going on in this market so that you don't have to listen to forecasters that make wild and crazy predictions, and that you learn to look at the conditions, not predictions, and that's what determines what to do next. I love Stackers University and I love what I do here, and it's because I really want to help you invest your time into learning and not just throwing your money at an investment. So when we had this latest pullback, when the Fed announced the interest rates and there was a little bit of a spike and then gold went all the way back pretty close to 1800, I sat on the sidelines. And I know what I'm suggesting is very contrary, and you're not likely to hear this from other creators on YouTube, but I don't think we need to be rushing. We have time to buy right now, and not all dips are built the same. And patience is your friend as an investor. And we have to practice that. We have to resist all the temptations from the online brokers sending email alerts telling you to buy the dip and offering specials. Isn't it interesting that they really seem to offer their very best deals only when the prices have fallen? Interesting. And while I hate to make predictions, I will let the market and the conditions give me a clue about what may happen next. And I truly believe that the gold and silver markets have further to fall. And as I shared with someone on Reddit last week, when the inflation numbers came in at 8.6 and we saw gold and silver take off, I said, quote, "Don't be fooled by this latest bump in gold and silver. It's going to give it back because the high inflation means they have to tighten more, which is bad for gold and strengthens the dollar, which will also put a little pressure on metals. Stack as normal, but don't feel FOMO or urgency because the economy hasn't had any real bloodshed. When it does, everything is going to sell off sharp and metals will rebound almost overnight. Like silver will have $2 or so kind of gains. It will be insane. I think right now it's really important that you have your plan and you stick to your plan because these conditions are going to tell us what's going on if we listen. So let's talk about these conditions. And because of time, I'm not going to cover all of them. I'm just going to simply go in depth about a few of them and list others. As I go through this list, please comment which of these indicators you believe is the most important to watch. We have higher inflation than expected. And we have to remind ourselves that higher inflation is good for gold, but it also means that the Fed will need to raise interest rates higher, which is going to put pressure on metals. Check out the inverted bond yield and gold price video for more information. 2, we have increasing real yields put negative pressure on metals. So as the Fed stops buying bonds and mortgage-backed securities, this is going to drive the bond prices down and yields higher until some new buyers step in, which they aren't. And so again, this becomes another headwind for metals. A more aggressive Fed policy, the market really hasn't capitulated. You listen to folks on CNBC and Jim Cramer and folks like that, they don't really believe we're in a bear market. And they keep telling people to buy this dip as it goes down, as if the market is just going to miraculously come back. We're in a bear market, but no one seems to know that or seems to be believing it. And so until we get that moment, people are gonna be stuck. And once they realize it, I fully expect a vicious sell-off and it to be very violent and severe where people will liquidate everything. It will be the proverbial throwing the baby out with the bathwater, which will put a strong downward pressure on gold prices, but I believe that that's going to make it rebound almost overnight. We still have our geopolitical concerns. We still have supply chain issues. And no matter what the Fed does to try to dampen demand and address inflation, but they can't pump any more oil. They can't grow any more grain. They can't address the energy issues. All they can do is really try to tamp down demand. The market is still very volatile right now. And high volatility in the market usually means things behave erratically. The strength of the dollar continues, and with currencies falling all over the world, there are people everywhere looking for safety. And where do they run? They run to the dollar. And while gold can increase with a rising dollar, with all these other negative headwinds and the cumulative effect is that I believe it's just too much. Now, mind you, gold has performed incredibly well. I mean, we really should be giving gold a standing ovation for it to be slightly up after everything we've experienced this year. And yes, silver, it actually isn't that bad either, folks. And I know silver's in negative territory, but all these pressures and gold and silver have still performed. So strengthen your resolve and really understand that this is amazing what's been going on. And that just means that it's going to be so much more powerful when it finally gets there. But we have time. We still have unemployment issues. The Fed has already articulated that part of how to dampen the demand is to increase unemployment. And that's going to be really painful. And a lot of people are going to get hurt. We already see the real estate market turning and transitioning. Inflation can't be fixed by quantitative tightening or raising the rates. There is a real concern and frankly a reality that we're going to be in recession within the next 12 months, I think, which only heightens the level of concerns about stagflation. And then my last point, which is kind of more of a concern or a warning, is that there's also a potential liquidity crisis. And that liquidity crisis, I think, is also going to be a part of this incredible sell-off that happens. And liquidity crisis, by definition, is a financial situation characterized by a lack of cash or easily convertible to cash assets, on hand across many businesses or financial institutions simultaneously, and the resulting lack of available liquidity can lead to widespread defaults and even bankruptcies. In this situation, people will sell any and everything that can be quickly converted into cash, which will include our metals. As I said, any one of these indicators doesn't mean that gold and silver can't go higher. But with all of this, I'm just not sure it can. Like making Thanksgiving dinner, when all of these conditions finally come together, it's going to do a number on the stock market and our economy, and we will have this one sell everything moment. So for that moment, I'm sitting on the sidelines stacking cash, waiting for it. That moment when we truly see blood in the streets, when the stock market drags everything down and people freak out and realize, holy cow, we're really screwed. Then I will pile in knowing that the downside has been minimized and the upside is overwhelming. If you've been listening to the financial experts, I can't tell you how many times I've heard over and over again over the last 2 months that many of them are just sitting in cash on the sidelines, waiting for the moment I just described. And while I'm not qualified to give you advice or make predictions, I can only tell you that I'm sitting on the sideline because I'm not going to believe the market is primed and ready to go until these conditions change. And from a technical perspective, if we have that watershed moment, watch out below because gold could drop as low as into the 1600s. So no, I didn't buy the last dip. And I may not in the short term because there's a likelihood that one of these dips, which will look like a pothole, can quickly become a sinkhole. And so there are two things I want you to consider as a part of your plan for the next 3 to 4 months, because I believe we really have time, folks. There are two things I want you to consider as a part of your plan for the next 3 to 4 months. One, are you comfortable with your gold and silver position? I'm fortunate enough to be in a position that while I'm greedy, because greed can be good, I'm very comfortable with my gold and silver positions. So I don't have the same sense of urgency to build my position as some of you may have. And so if you aren't where you really would like to be, as the market has these gyrations, take that as opportunity to buy those little dips and get your position where you want those to be. But if you're comfortable with it, I think there might be a better buying opportunity where you will be able to get more metal for your money. Number two, and in some ways this may be almost more important than your gold and silver position, but are you comfortable with your cash position? If the answer is yes, then I want you to take maybe the next 3 to 4 months and try to double your cash position. That's my goal right now. Right now, my current stack of silver and gold is like an insurance policy in case metals do take off. When the market finally hits bottom, will provide you with one of the greatest opportunities to get the most metals for your dollars. And while it's great to be buying gold at 1800, and I will not shame anyone for buying at 1800, I think I'm going to have an opportunity to buy maybe at 1650 and I'll be a little bit happier. And I think that's sometime late in the fall. Once we get through this election, I think the wheels will start to fall off. My ultimate point is that the potential for downside right now is greater than the likelihood of metals taking off without me. In this scenario, I don't believe you need to buy every dip. Obviously, that's your choice. All I ask is that you don't make your investment decisions based off of what you hope gold and silver will do, but what the market is telling you it's going to do, especially in the short term. So all we can do is make the best decisions we can with the information we have at the moment. So please take a moment to answer any of these questions in the comment. What direction do you think metals are heading within the next 30 days? What condition do you think will make metals finally take off? Of these indicators shared, which do you believe is the most important to watch? If nothing else, you can always give yourself a letter grade for how well you understand today's video content. But no matter what, you will always be my A+ students for watching this video all the way through. You know how we end things around here, folks. Always stack smarter and never stop learning.